it's kind of terrifying sometimes to start letting other people do things that you used to do. Even as much as you say you wanted to let go of those things, it's also one of the most rewarding things when they actually are able to do it and do it better than you, because that's how you go out and hire, right? Hire people that know more about these things than you do, are going to be better at it. Well, obviously we are niche, right? And so again, even though we'll buy things, like I said, anywhere from completely opportunistic to more stabilized, it's all in this really unique box.
So at the beginning, I'm sure the focus was just on doing deals, trying to grow the company, and you were wearing like a million different hats. Today, what's your role look like in the organization? Is it mainly talking to investors, raising capitals, talking to lenders, or is it still evaluating deals, doing all the DD? What's it kind of look like overall?
That's a great question. We're definitely much further along than I probably sound. My partner and I have two very different personalities, but also have a very unique alignment. But he's very much, one of those pure natural salespeople, and focuses on, what do we need to do in the short term, right? Like, we should be selling this property and let's get this deal done and this, and that, and the other. Where a lot of times I'm way more bigger picture, structuring the next vehicle or debt or whatever it may be. And so it's always a healthy balance of him coming to me sometimes being like, hey, I know this big vision is really great and everything, but we also need to do some stuff today. But from the operations of the company, he and I we're taking a lot of strides right now, actually, and being a little bit more corporate and structured, and, what are our actual job descriptions and what does that mean for everybody else? And so, high level, my primary independent roles are the bigger picture strategy, obviously, when it comes to structuring the next vehicle or restructuring or adding layers into new investment classes and that sort of stuff. And like big picture strategy is definitely my strongest suit. And then also the communication on a daily or weekly basis kind of with the leadership team internally on, feedback of what's going on from the owner's perspective, and also what their focuses are, and trying to keep that communication as balanced as possible so that there is a consistent presence there, and also learning more and more how to let go of some of those responsibilities and let people really kind of take more ownership in their roles and their responsibilities. And, as much as I say I'm not a micromanager, which I'm not, I'm also, it's kind of terrifying sometimes to start letting other people do things that you used to do. Even as much as you say you wanted to let go of those things, it's also one of the most rewarding things when they actually are able to do it and do it better than you, because that's how you go out and hire, right? Hire people that know more about these things than you do, are going to be better at it, so you can do your highest and best use. And so actually seeing that come together is super rewarding. We've come a long way there. That's essentially kind of my day-to-day, which includes Joe and I both are the ones that will go out and actually raise the money, and a lot of times have the relationships with lenders and all that kind of stuff too. But every day's different.
Yeah, I bet. I mean, with your growth, I can only imagine that your role is evolving every single month or year. You mentioned being primarily responsible for the investment vehicle, or I guess the way you're structured to allow outside investors to invest in your deals. Why did you make the switch from the fund to the REIT? And also, if someone wanted to invest with MRP today, what would that vehicle look like, and how would they go about maybe getting in touch with you guys?
A unique thing about our company compared to a lot of real estate sponsors is, well, obviously we are niche, right? And so again, even though we'll buy things, like I said, anywhere from completely opportunistic to more stabilized, it's all in this really unique box. And at the end of the day, I try to position what we do really as consolidating a fragmented asset class, and versus, just a real estate investor. And what I mean by that more is, we did fund one because we didn't want to keep doing syndications. But at the same time, after fund one, we didn't want to start fund two and then start fund three and just have these isolated buckets of this asset class that the sum of the parts are worth way more than being in these isolated vehicles. And our goal as a company is not just to be fund managers, right? If that was the case, we'd probably have like a triple net fund and this, that, and the other, right? But that's not the end goal. We'll be raising money from investors for a very long time, but it's not just to do it to have 10 funds. So after Fund 1, we had a family office that was ready to anchor Fund 2 just right after it and just kind of go through that cycle. But we were thinking we need to find a way to be able to buy things going forward for the extended future into one vehicle, and in the perfect world, even consolidate what we already have into one vehicle. And so that kind of started us off on a process of what are the other ways we could do this outside of just doing another fund, and just kind of talking to mentors and connections is kind of how we fell into working with our GP partner on the REIT into what we were trying to accomplish, what they felt like they and other family offices were trying to accomplish. And that ended up becoming a private REIT, which was a lot of the structure modeled off of, the bigger private REITs of the world right now. So like B REIT and S REIT, and a lot of differences, but at the same time, the core kind of functionality of it is very similar. And at the time, it was perpetual vehicle. We could raise money as the pipeline needed it. And it was a structure that was easier to start consolidating. And again, the perpetual nature of it allowed us to kind of not have to create another vehicle. I think you always need to be nimble. And obviously, we're in a very different world today than we were in April of 2022 when we launched the REIT. There's a lot of complexities that come with the REIT. And so we're always kind of strategizing on how do we continue to adapt to still accomplish what we want to accomplish and what's achievable, both in the capital markets and just on the operational side of things. And so that's kind of always one of the benefits of a structure like the REIT is it leaves you open to be able to kind of add things and change things as you go, versus if you have a closed-ended fund, then it's just this is what you're doing no matter what kind of thing. We've been digging into a lot of certain ways to just be realistic about what the capital markets look like. And at the end of the day, what we're really trying to accomplish, which is a consolidation of this asset class, continuing to scale it, and then in about 5 years or so, explore a capital event. And that could be anything from an exit to a refinance, right? And but most importantly for us, it's getting it to a certain size that opens us up to a larger pool of potential capital partners or exit partners, where that's why I kind of threw in consolidating a fragmented market, because if we just wanted to go the route of build this big portfolio and sell to just another traditional real estate company, it's a pretty limiting exit path. And we just think there's so much more opportunity once you've gotten this to a size that gets the attention of people that write checks of a minimum size, obviously. And also they've never seen, this unique asset class that's in America. That's, we've been at that time, it's 5 years from now, so we've been doing it for almost 15 years. But also that's still incredibly scalable. So right now the vehicle that we are continuing to raise money in is the REIT vehicle. And that's the primary vehicle that we'll be growing this strategy with going forward.
How can someone invest if they wanted to invest today or tomorrow? What should they go on your website? Should they maybe just follow you on Twitter, or what's the best way for someone to get to know you and the company?
You can reach out to me personally. So my email address, I can either say it or if it's on the thing, but
I'll add it in there as well. But
my email, my cell phone, and that's the easiest way to kind of start that conversation.
Are you sure about your cell phone?
Yeah.
Okay.
At this point, there's no going back.
Okay. No, that's very unique. And I think I'm sure people would appreciate that availability, because it's not like you're pointing us towards a general email inbox or like an assistant. So the fact that you're putting your cell phone out there, I think, is huge. And I think it really speaks to your character and what you guys are doing. I'd like to end each show with what we call a hole-in-one. But before we get to that, I do have one more question for you just on the exit strategy. You mentioned a potential refi. My understanding is in retail, you have less debt options available versus multifamily. So would that refi look like a life co, or would it be a community bank? Or can you kind of speak to what a potential refi may look like in your world?
Yeah, I mean, at that scale, it's a larger institution. Ironically, like we have gone back to purely community and regional banks. By the end of this year, we should be done with those refinances, which is where we started, and we explored some others. But that's how we'll continue to grow. But that final kind of like refinance will be a larger institution for sure. And who knows what the debt markets will look like at that time. But I mentioned that strategy because it's one of the easiest to underwrite. And even if you as long as you believe in our projections and everything, the debt that we have now, and if you increase that, NOI even at a conservative rate, and you refinance back up to a very conservative number, it's the safest underwriting to know that there's an exit there for people. And then on the other end of the spectrum is maybe some non-traditional real estate investors that, like the cash flow play, or, asset managers or whatever it may be, that will also go out and pursue, but in everything in the middle. But the refinance is just one of the easiest to contemplate and easiest to underwrite, and also could be one of the best scenarios that we end up having from a, not like an actionability standpoint, but from a everybody's happy standpoint.
Yeah, and if deals make sense with where rates are today, 5 years from now, I would have to imagine, that I don't know. I can't really put that out there. I was going to say I'd have to imagine rates are a little lower than today, but we truly don't know. And I'd hate to be the guy that's putting predictions out there. But let's say if rates are even 100 basis points lower 5 years from now, and the deal made sense today, and you had that NOI growth, that's shaping up to be a home run.
Yeah, I mean, I think the way we look at it, and I think and it's very different than development or anything else, but, anything we underwrite today, we assume interest rates are exactly the same. If anything, we'll inflate cap rates somewhat, unless it's obviously we're buying something super undervalued. But if you can get a return that we're excited about and happy about with all those factors conservatively, then it's, something we do all day long. If rates go down, great. If cap rates compress, even better, right? If we outperform that NOI, even better. But, we truly would own this stuff forever, and that's how we look at it. And, we just know that with continued scale, that it's just going to open up more opportunities for us to explore when the time comes.